Hey everyone, it's Paul with your Tuesday weekly video. And this week I have a amazing stock that I'm going to bet that very few of you have heard of, even if you were with me when I was with Banyan Hill. I'm thinking the vast majority of you never heard of the stock and so don't know about it. The stock is in our gold tier, which is like our stock picking tier of ATG Digital Media. Make sure to check us out. Oh, I'm getting too far ahead. I need to first, do this, which is rapid disclaimer, which is this video, the content, the model portfolios, updates, Substacks, tweets. What else we got? Instagrams, anything else, LinkedIn, anything that we do, not investment advice. They represent opinion, information, engagement. And for those of you who find me hilarious, entertainment. And there are folks that find me hilarious. Always read the comments. I mean, there's people, that, yeah, they think I'm hilarious. So, hey, I'm happy to accommodate. It's okay. Past performance does not equal future results. Yeah, I mean, it's because something happened before doesn't mean it's going to happen again. Errors, mistakes, oversights, yeah, they happen because me, our team, our amazing team, as awesome as they are, we still, hey, we're human. All these things creep in. Capital loss is a likely and possible outcome. Many people only think of the upside. The reality is that there's upside and there's downside. When you take risks, there's the possibility of loss. And so just want to remind you of that. Anything you choose to do, it's on you. And you're not guaranteed of a profit as a result of pursuing anything that we tell you about, whether it be this video or any of your portfolios. Finally, I, the owners, contractors, employees, associates of ATG Digital Media, which is my company, we own, we trade, we transact in the investments that are mentioned in this video, in our model portfolios, updates, tweets, all the above. And hey, in case you didn't guess, well, hey, quick rapid plug for ATG Digital Media. We have paid subscriptions that start at $9.99. Yeah, not $999, not $1,000 a month, $9.99. Yeah, pretty affordable, right? Yeah. I mean, there's ones that are higher from there, but $9.99. And for that, it's pretty amazing, in my opinion. And of course, I'm based. I mean, you get stock picks, crypto picks, updates, market strategy, commentary, and you want to check it out and see what do these folks sound like, think like, how do they put things together in the world? Well, try us out. paulmanpilly.substack.com, which is 100% free. Free. All right. Today's video, folks. Today's video. All right. Number one, EV stock setting up to surge higher. Surge higher right now. Right now. Right now. No BS, for real. Right now. All right. And why? Well, let's start with a little bit of big picture first. Dean, roll out the slides, as I tell them, okay? And put them up for like 2 or 3 seconds so folks can at least read it. All right, number one, macro, big picture point is that EV sales are surging higher. I saw this headline and I can't believe it. I mean, it's not hard, which is that you see the summer sales surge sees one battery electric car registered every 60 seconds. Heck, a few years ago, there was not even one being registered every 60 days. Now it's every 60 seconds. I'm going to tell you why this is important in a moment, all right? Next big picture item. You may have missed it, but San Francisco has approved robo-taxis. Robo-taxis, no human driver, completely automated human taxis, which are operating 24/7 in the streets and the city of San Francisco. That's a big, big deal. And there are at least 3 other cities that are now probably going to follow San Francisco. I believe Phoenix, I believe LA, and Austin, Texas. And before you know it, it'll be like Uber and when it rolled out, which is that you'll start to see it in more and more cities. And I'll tell you why this is important. Final big picture, which is this rise of autonomous trucks. Very quietly in the background, autonomous trucks continue to sort of push forward. The sort of like ground zero, if you will, of autonomous trucking is, I believe, a route between San Antonio and Dallas where they're experimenting, and it's just a matter of time because we have a labor shortage, especially for truck drivers. So this is a solution, especially for the long haul routes. All right. So the thing that really sort of puts it all together and gets to the stock that I'm going to tell you about is that whether it be EVs, whether it be robo-taxis, whether it be autonomous truck, they have an extraordinary amount of new electronic gear that is new, means it's not made by the old school parts makers. It's not made by any trucking company. In other words, they got to buy it from the people that actually make it. And these are new companies that are making new technology. And there is one particular piece of electronic gear. I can tell you what it is that, in my opinion, is setting up for a massive, incredible surge higher. All right, we can do the big reveal, Dean. It is lidar, which is like a much more advanced and sort of like shorter version of radar, which uses light. And the lidar forecast, because of everything I told you earlier about EVs, because for self-driving cars, Tesla doesn't use it, but everyone else is using lidar to sort of power their self-driving cars. Yeah, I mean, so that's lidar sales. And robo-taxis, yeah, I mean, they definitely use lidar. And so do autonomous trucks. So that's a lot of lidars that's going to have to be bought. Somebody's going to have to make them. And so you can see there, this is a forecast by someone called Fortune Business Insights, and they have lidar sales just rocketing higher, going up by almost 20% per year. I believe the number was from something like 1.9-ish billion in 2022 to about 8-ish billion by 2030. So that's like a rate of about 20% a year, which, just so you know, is a very high rate of return year after year after year. And in my judgment, there is really one stock that is like really setting up to surge higher as a result of everything that is going on. I'm ready to reveal it. Ta-da! Ouster. I think it's Ouster. Maybe it's Ouster, but I doubt it. I'm going to go with Ouster. So this is genuinely like a tiny stock. I mean, remember, we've got stocks like Apple that are worth 3 trillion. This is not even worth 300 million, right? So Apple is what? 10 times would be 3 billion, right? 100 times would be 30 billion. 1,000 times would be 300 billion. Oh my God, you get a headache. Either way, you get my point. This is a very, very small stock. And if the outlook for EVs, for robo-taxis, for autonomous trucking is as huge as is being made out, well, hey, this market capitalization, 300 million. And I tell you all the time, you can't just judge by stock price. You got to go by market capitalization. That's the total stock market value of the company. It's going to go up. And obviously, if that goes up, it takes the stock price with it. The stock price is about $7.55 right now. All right, let's do some forecasts. Yeah, it's forecasts. So if you go look, analyst estimates, take it with a grain of salt, but nonetheless, analyst estimates for 2023 for this company up 101%, 82 million, seems reasonable. 2024, 136 million, up 66%, seems reasonable. But I can tell you from someone that focuses exclusively on growth companies on innovation companies, on opportunities companies. In other words, companies that are focused on doing something new, that is fast growing. Yeah, these multiples on sales. Like, in other words, if you take the market capitalization of the company and you divide its sales, you come up with a price to sales multiple. 3.5 times is cheap for a company that's growing at 100%. Yeah, I mean, that's cheap. 2 times, in other words, you go out to 2024, if you believe the forecast, and given the macro picture, the big picture, there's every reason to believe it. 2 times sales, that's cheap. That's really, really, really cheap. In other words, yeah, what's going to happen is that growth investors are going to find Ouster, and they're going to bid it up. They're going to bid it up. They're going to take it from 2 times sales to 3 times sales to 4 times sales. I mean, heck, there's an entire 5-6 year period when stocks that could grow consistently at 20 or 30% were trading at 12 or 15 times sales. So imagine 3 to 5 years out, this company growing at 30, 40, 50% year after year. I mean, yeah, you're going to get to some big numbers. They're on a run rate of about 50 million. So if you're growing at 20 or 30% a year, that sales is going up, but then also that price to sales multiple acts as this accelerant to just rocket the stock up. All right, what about some other details that the market cares about? The market cares hey, do you have enough money to pursue your growth projects? In other words, yeah, it's fine that there's all of this opportunity from EVs and robo-taxis and autonomous trucks, but do you have enough money to pursue it without having to issue a bunch of shares? Or maybe you have to take on very high interest rates through borrowing. Well, Ouster has $224 million in cash. And this company is actually a merger between 2 companies that made lidar. One was called Velodyne Lidar, which was its own company, and they were acquired by Ouster. Why can't I get this right? And so as a result of this merger, they're going to cut $110 million in costs, which based on my very rough back of the envelope calculation, puts them on track to be cash flow profitable. And that matters because the market, as it stands today, wants to see companies that can be self-sufficient and not have to go back to the market and say, hey, I need more money. Yes, I can grow very fast, but I need more money. The market wants to see that you are well on your way towards being self-sustaining and being able to support your growth. So you got to have some cash in the bank. Can't be down to your last, penny or two. And then you got to be showing that hey, you're very close. You don't have to be showing, regular profits, but you need to show that you can be positive cash flow. In other words, you can support your own business from what you're doing. So this company, Ouster, just reported yesterday, and they reported that everything is going as well as you can imagine. Sales are rocketing up. They've got a backlog of something like $40 million, which is huge, which tells you that there's people lining up to actually buy their equipment, which of course fits in with everything I was telling you in terms of the big picture. So that's my stock for the week. The number one, I'm rapidly trying to grab my number one tiny lidar stock. Oh yeah, 87% increase in sales, 43 million in backlog. Yeah, Ouster, because I try to get this slide. Yeah, just a reminder. And then hey, check out atgdigital.media or paulmanpilly.substack.com. And finally, hey, thanks for watching. Come back next week. This is Paul saying bye.